At present, China is implementing a dual approach, but the management's efforts to encourage going out to sea outweigh the enthusiasm for domestic drainage. As a result, QDII has become a fashionable concept, indicating that there is a lot of room for hiding risks among the people. From the perspective of national conditions and current situation, it is estimated that the possible channels for waterlogging drainage in the future mainly include 1. Introducing Hong Kong financial products and increasing the choice of mainland investors, which will not only prosper the Hong Kong market, but also be conducive to the internationalization of the renminbi. The 11th Five-Year Plan Action Plan of the Hong Kong Special Administrative Region suggests using the form of free flow of funds to allow mainland residents to directly invest in Hong Kong without the need for institutional investors integrate products, and suggest allowing non-Hong Kong residents to open RMB accounts in Hong Kong to increase RMB flow in Hong Kong. 2. Taking advantage of the opportunity for new rural construction funds will be used to encourage farmers to start their own businesses, activate the rural economy, encourage various forms of rural financial organizations, and explore the development of rural financial markets. 3. Unbind private financial organizations, support private entrepreneurship, investment and high-tech R&D investment, especially support R&D investment by private enterprises. Among the above channels, the third one has not yet received the attention of management, but this channel is far more prominent than previous. The actual significance is much greater. Use a major bottleneck in innovation for domestic enterprises is insufficient R&D investment, especially as private enterprises are at the threshold of industrial upgrading, which is difficult to obtain official support and discriminated against by the financial market. However, RDI innovation by domestic private enterprises can not only evaporate excess currency, but also retain experience and achievements domestically, enhancing the level of China's economy. Therefore, using excess currency to support private enterprise research and development is a highly anticipated drainage channel. Investment channels. Therefore, the management hopes to evacuate excess liquidity and alleviate inflation concerns through the aforementioned policies. From the current Investment and Financing Qualification Bureau, the stock market will play the main role in releasing liquidity. Banks have been under the pressure of more than 10 trillion yuan of savings account. The policy tightening curse of the property market will continue to be stressed, and the new policy of 2007 also has an input-output cycle. The stock market is in need of funds and investors are full of expectations because the foundation of the split share structure reform has just improved. The overall listing of central enterprises has begun, and high-quality overseas listed companies will return to A shares in succession. Moreover, the expansion of the stock market will not cause comprehensive inflation, and the impact of stock market evaporation on the social economy is limited. However, The evaporation of the stock market has a one-sided nature, which can only turn excess currency into nothing. However, it cannot create new economic value like entrepreneurial investment, and retail investors are mostly salaried, even the grassroots level. If the evaporation is too strong, it is not conducive to harmony and the healthy development of the capital market. Because of this, the stock market fell into foam panic. At present, the controversy over the stock market and the management's defcon to the foam show the management's processing flow the dilemma of excess mobility. In fact, throughout the history of human financial industry development, there have been roughly 6 versions of financial management to prevent financial risks. One is to regulate finance. This is a relatively basic version of management where the government implements strict control over various financial activities in society, resulting in high management costs and all financial risks being covered by the state. Generally, countries with underdeveloped financial industries or a planned economy adopt this version. The second is market finance, which means that financial activities are completely carried out freely by the market, and risks are also borne by the market, with the government letting it go. 6 versions of financial realm evaporated through the stock market at the beginning of 2008. There was constant news in the financial industry. On January 5, the State Administration of Foreign Exchange issued the Measures for the Administration of Individual Foreign Exchange. The implementation rules significantly increase the annual total amount of foreign exchange purchases by domestic individuals from the previous $20,000 to $50,000. On January 10, the State Council approved the expansion of the scope of RMB business in Hong Kong, allowing mainland financial institutions to issue RMB bonds in Hong Kong. On January 19, the Third National Financial Work Conference was held, proposing the development of the bond market and the reform of rural finance. Along with the frequent emergence of new policies, the market is also bustling. On the one hand, the RMB exchange rate has continuously broken through and appreciated, and as of February 8, it has accumulated an appreciation of nearly 0.7% in just 1 month. On the other hand, the stock market first took advantage of the bull market momentum in 2006 to close to 3000 points. But on January 25, Rogers, a master investor, poured a pot of cold water for, and on January 30, Cheng Siwai, vice chairman of the National People's Congress, issued a verbal warning of Foam 5. The CSRC, the central bank, the CBRC, and other visible hands have also been extended one after another, and the stock market has experienced a sharp oscillation in the fierce debate of the foam theory. Why is the financial industry so lively? Why did the stock market fall into the foam panic? The underlying factor behind the burning passion of policy and markets is excess liquidity. The real estate market, stock market, and foreign exchange market in 2006 driven by the remaining funds. The momentum is skyrocketing. especially as the real estate market continues to climb under strict policy control. There are two main reasons for this. One is that there are too few ways out for excess currency except for bank deposits, which are also the stock market and real estate market. The second issue is that where money is needed it cannot be found, such as rural areas and small and medium-sized enterprises, which have always been struggling with financing. Obviously, China's excess liquidity is relatively surplus relative to the excess of I. The third is planned finance. That is, on the basis of market finance, the government resolves or reduces financial risks through some planned policy means, such as the amount of banknotes issued, the statutory reserve rate, the scale of open market operation, moral advice and other financial activities that affect the market. The fourth is hybrid finance, which is a combination of the first three versions, with different weights for each version at different stages of development. Usually countries that adopt this version have significant regional differences in financial development, and therefore financial management is treated differently. Currently, China is a mixture of regulated finance such as state-owned wholly owned banks, which are undergoing marketization, market finance such as private underground finance, and planned finance, such as the Central Bank and the China Banking Regulatory Commission. The fifth is evaporation. This is a relatively risky management method that is actively pierce the appropriate foam to avoid greater risks with smaller losses. This is a leap in financial risk management, as excess is the fate of a market economy, and evaporation is a natural trend. 6 is drainage. This is a version upgrade based on evaporation, which opens up a new field of venture capital and has both evaporation and investment functions. It can not only erase excess but also use excess to create new value. From the above analysis, it can be seen that the central bank is now carrying the pressure of excess liquidity on its own, which is neither necessary nor impossible. It is entirely possible for the central bank to further upgrade to hiding risks for the people on the basis of hiding remittances for the people and hiding wealth for the people in the future. The relative excess liquidity indicates the reality and possibility of hiding risks for the people, and flood control is currently the best choice, which has been reflected in the recent financial new policy. According to international experience, there are two directions for drainage. One is to drain waterlogging overseas, which is also one of the incentives for financial globalization. In general, when there is little room for expansion of domestic drainage space, excess capital cannot be exported overseas. The second is domestic drainage, which means digesting excess capital as much as possible within the country and leaving no land for outsiders.